please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A look at the IndusInd Bank, and that particular result is out in just moments from now. The stock is up 0.4%, and Abhishek is here to take us through. All right, we just expecting those numbers, and ahead of the numbers, it's
net profit is at 953 crores, absolutely in line with the net profit that our poll was throwing up, 952 crores. Gross NPA at 1.17%. Our poll was indicating anything below 1.2% would be a positive. So no real change as far as the gross NPA or the net profit is concerned. Yeah,
I'll just tell you, gross NPA in absolute value has increased almost 14% on a sequential basis. So you have gross NPA coming in at 1,705 crore. That compares to about 1,499 crore. So, you know, gross NPA in absolute value has increased by 14%, while net NPA in absolute value has increased by 26%. So two things which you can just read from these numbers are advances growth must have been strong, that is why the percentage is small, and you know, provisions must have come down, so that is why your net NPA rises faster than your gross NPA.
All right, I'm trying to get a handle of the interest earned versus interest expended to try and see what the net interest income has been. Trying to also get in the fact that you have provisions. You were talking about provisions which have come down. Yes, they have. They're at 335 crores. That compares to about 430 crores. So that is as far as provisions are concerned. Most importantly, gross NPA divergence as per the bank till March has been, that number should come up for you, till March 2017 has been 2,405 crores. Okay. RBI's assessment till March 2,000 crores, and as per bank till March is 1,055 crores. So what would you make of that?
This is bad. Divergence was in the previous, that is FY16, was at 560 crores. So from there, the divergence has now increased to about 1,350 crores. So this is a huge divergence given the fact that loan growth has also been there. I'll just work out how much it works out to previous year's advances number. The NII number that you were speaking of, the NII has come in at 2,008 crore. So that compares to our poll of 1,988 crore. And if you look at the growth, YOY, it is at 20.4%.
All right, so 20.4%, that's as far as the NII is concerned. We have Lalitabh Srivastav joining us from Sharekhan. Lalitabh, net profit is absolutely fine, in line with expectations. Net interest income growth of 20%. But any comment that you would like to make as far as the divergence disclosure is concerned? What do you, how do you view these results?
Still going through the numbers, but broadly the numbers seem to be in line on NII, provision and PAT front. The only thing is that, you know, your gross NPAs on a percentage wise has also been stable, but I'll have to go through the divergence thing. I'm still reading that.
Okay, you know, Lalita, the divergence is for last year, of course, and that has led to the reported profit for FY17 going down by about 200 crores. They had reported a profit of 2,867. The profit goes down to 2,639 crores. So about 200 crore lower profit, and that is because provisioning for NPA, which they had set aside as 615, the RBI wants it to be 965. So RBI wants 350 crore more to be set aside as provisioning, which has resulted in a lower profit of 200 crore. That's really the broad divergence as far as FY17 is concerned. Any thoughts?
Yeah, the very fact that, you know, even though this number is not very, very big, the fact that this divergence has come up with IndusInd Bank as well, I think that needs to be seen in perspective, because this bank had a very, very good run on asset quality so far.
I'll just give a few more details. In terms of business growth, the deposits have grown by 19.8% on a YOY basis. So the total deposits now stand at 1.52 lakh crores. And you look at the advances growth, now that's seen an uptick. As I explained earlier, the percentage in gross NPA looks smaller. So, you know, advances growth have come in at 28.2% on a YOY basis, while it has come at 12.8% on a sequential sequential basis. So there's a sharp spike in loan growth, and that is why the gross NPA in percentage wise looks small. And coming on to the divergence, now this divergence of 1,350 crore, this forms about 1.19% of the then FY17 loan book.
That's not small, no? They have reported they had reported NPA of 1,000 crore. RBI is saying it is 2,500 crore, or rather 2,400 crore. So it's a 140% jump. It's a fairly big divergence that RBI is pointing out. The stock is 1.5 down. Would it be just a passing discomfort, you think, Lalita?
That I'll leave the management to take a comment on.
No. What would your call be as a stock buyer or seller?
My sense is that this is an overhang right now. Whatever the management says will throw more light on that. But as of now, this is an overhang. You do not expect a bank like these to have significant divergence because of their size as well as the run up that they were having.
Okay.
Secondly,
okay.
Yeah, even in this quarter, there has been like some NPA addition that has happened on a sequential basis.
Okay, wait 1 minute. Lalita, I think we can clarify that. See, the divergence the bank has said is 1,350 crores. This is a loan, a large standard cement M&A bridge loan provided for as per IRAC norms in March 2017. So they've almost said it is JP Ultratech. I don't think you need further, you don't need any more clues. Of that, that was 518 crore. So of that 1,350, 518 is explained by this deal, which is now a done deal. Loan fully paid back is 257 crore. Loan classified as NPA as per divergence was 236 crore. So, and then a loan was sold to the ARC, that was 118 crore. And written off portion is 35 crore. And loans to a toll road project, which was classified as NPA by the bank, currently considered by the consortium as standard, is 106 crore. Balance of divergence recognized 81. So I think one part 518 is already paid. One part they've already sold off to an ARC. And therefore, net the addition to GNPA in the subsequent quarter, I think, is only about 200 crores. That is why the profit is down only by 200 crores, maybe.
Right, so let's get in a comment from Krishnan of SBI Cap Securities as well. Some clarity coming on divergence and 28% loan growth. How do you view these numbers?
As I was listening to you recount all of these numbers, I think I can only, sense that number one, this divergence has come on an asset book. IndusInd Bank is not generally seen to be corporate lender, right? And despite that, there is a wholesale portfolio where the RBI is observing the divergence. So that's number one. Number two, this divergence has come, very late compared to the likes of, say, ICICI Bank, right? I mean, ICICI Bank reported nearly 4 quarters back. So the cycle also has taken its own sweet time in terms of, the divergence being reported because the RBI supervision cycle.
Krishnan, so what is net your observation for the stock itself?
We've had whole hesitation because we've been a bit worried on where IndusInd Bank franchise is headed over the next 3 years because of the Marvin merger, etc. So I think the customer franchise at IndusInd Bank is what we are
Krishnan, we can't hear. We are not able to hear very clearly. Maybe we should redial. It's an extremely disturbed line. We should get back to you in a minute. We'll redial. You have something to add, Abhishek?
We also have Siddharth Purohit, so we'll go to Siddharth Purohit. Siddharth, the stock has recovered a tad bit from the low point of the day after some clarity emerging on the divergence. What would your call be basis the numbers that the company has reported for this quarter?
Yeah, if you look at the broader numbers, on business front, the number has been quite satisfactory. Whether it is loan growth, I think 28% is something better than expected. and even on the bottom line front has been, I think, little lower than what I would have expected, but that partly because of the lower other income. Now, coming back to what you were talking about, the divergence thing, I think since it is pertaining to FY17, and they have clarified also that one of the loan has been kind of repaid, fully repaid, and so the net, I think that the credit cost in the last 2-3 quarters is already factoring those things. So I don't see that as a major concern.
Okay, but
most of the accounts, I mean, whatever divergence was supposed to come up for the industry has largely come in. So I don't think that one should really worry about divergence going ahead for FY19. So I think had it been a kind of very troubled account, then provisioning should have gone up during this quarter.
Okay. So you maintain a buy on the stock, you would say, at current levels?
We have a positive stand and a buy rating on the stock.
Okay. Just stay on, Siddharth. I think we have reconnected with Krishnan. Hopefully, Krishnan, this line should work. First, your thoughts on IndusInd itself. You think this is a passing discomfort?
No, so I think this is something we'll have to digest and may be an overhang on the stock, as somebody else also mentioned. We have had a hold recommendation. We are, slightly worried about where the customer franchise is headed. Our sense was that given that IIB is not generally known to be a full corporate lender, this is incremental news now, right?
Yeah.
So a divergence of nearly 1,350 crores on 1,000 crore NPA that you reported, it seems like an overhang that the stock will have to stay with for a while. But even otherwise, we have generally felt after the Bhavin merger, there will be some dilution to their customer franchise.
Okay.
So we have a neutral recommendation on the stock. Yeah.
Lata, just one factor I would like to highlight. While the loan growth is at 7-quarter high, the operating profit is at just 12.5%. So it has been impacted by other income. More so, why? Because generally, if you see, IndusInd Bank has always had a higher share of other income contributing to the top line apart from the NII growth. So while the NII growth is at 20.4%, the operating profit growth is at just 12.5%. And that is on the back of other income being flat. So therefore,
so is it lower fee income
provision,
or is it some mark-to-market kind of problem?
There can be both. But when you have a balance sheet growing at 28%, you should have some kind of growth in your fee income also, because that leads to, you charge fees. And over the last few quarters, if you see, corporate book share has been increasing, and that is a fee generating income that should be there. So almost flat kind of an other income is a bit of a worry, because even if you check sequentially, the loan growth is at 12.8%, but operating profit growth is at just 1.8%.
Okay.
So a bit of niggling worry in this quarter only is the operating profit growth.
Okay. Lalitab, you wanted to come on this. See, divergence is one issue, low fee income. Together, what is your call on the stock?
Despite, I'll just answer what Abhishek was, pointing out. You have had a very good advances growth given, but last year you were having a treasury income of somewhere around 215 crores. That was a fairly high base. Seen on that base, you will, and given the bond yields movement that we have seen, so that is explainable. Our stance is positive as of now on the stock, and I think we'll continue that way.
Okay. Well, a final couple of questions to Krishnan and Siddharth as well. Krishnan, if IndusInd Bank is going to have 1,500 crore of divergence, would you worry about the other corporate lenders?
No, and I'll tell you why. The reason is the FY16 supervision cycle was announced in April 2017.
Okay.
Right? The FY17 supervision cycle was also announced within 6 months to 12 months. So banks have not had a chance to, absorb the lessons from supervision cycle 1, because by the time they reported, by the time RBI gave them a feedback on supervision cycle FY16, they had already reported their FY17 numbers. Right? Right? So I think now banks have a chance to digest and absorb all this.
All right.
I presume divergence will reduce as we move forward.
All right. Okay, Krishnan, we'll have to wind up this conversation. All of you, thank you very much for joining us, because there's some big news hitting the wires now. Reliance and BP, they've discovered gas, is it? I mean, three projects will be. Okay,
they will invest in 3 projects with a total investment of about 40,000 crores. That is something that Reliance has outlaid. Expect to bring in a total of 30 to 35 million cubic meters of gas per day over 2020, 2022. That stock has moved to the high point of the day on the back of this. Reliance Industries and BP sanctioned second phase of integrated KG D6 development. So those are the lines hitting the screens right now. We're trying to get in some more details as far as what this means for the long-term prospects of the company in terms of the EPS accretion as well, and when does the revenue start to flow in from this. But as of now, 3 projects with BP will be done with a total investment of 40,000 crores. How long this takes for the companies or the capacities to come on stream and revenue recognition is something that we'll need to watch out for. But the street clearly likes this. The stock has moved about 1% from the low point of today's trading session, sitting with 0.75% of a gain, expecting to bring in a total of 30-35 million cubic meters of gas per day over 2020 and 2022. So we have the timeline as well. So from 2020 and 2022, they will get the sort of capacity that they have.
Our first experience with the promise from KG D6 was not very positive. But this time, I guess both companies would be extremely careful about what they are promising. This is extremely positive news because we actually have about 70,000 crore of gas-based power plants stranded. And if indeed this second phase of D6 succeeds, then, we're already in 18. So 2020 is not a very long way. I think it would be very positive news for the banks. Instead of selling those power plants, which are all going to come to the NCLT and going to come, go to liquidation values, it will be worth their while to just sit on those plants. And, they will sell at a better price. So for the economy itself, this is very good news. For Reliance itself, of course, this is definitely a big tailwind. Maybe the positivity is going to hit a little later. But, I mean, this for the economy is huge. A lot was premised on the previous round, the KGD6 first round of gas excavations. This time around, I'm sure company, government, everybody will be way more careful about what they are promising and what will be delivered. This is extremely positive news for the economy. The stock itself, of course, is up just about 0.7%. But big news, 40,000 crore of investment. Everyone was wondering after, it's a company that throws out cash hand over fist. And after the 1.5 lakh crore investment in Jio, what will they do with, the 50,000, 75,000 crore of cash profit that they are throwing up, that they will throw up every year when even Jio starts perhaps becoming profitable? That is somewhat answered. One small project for that big amount of money is being announced. From Reliance, I guess half the money or some of it would go, not the entire 40,000 crore. But this is very big news. And of course, the standard disclaimer coming, Reliance owns the channel you're watching.
All right, so on that note, we'll wrap up on Business Lunch, the extended version of Business Lunch. But stay tuned to CNBC TV18. Mid-Cap Radar comes up next. All right, we were talking about Reliance and the discovery that the project investment that the company has outlaid as far as the gas business is concerned. On that, we have some commentary coming in. Mr. Tulsian now joins us. Sir, the stock has recovered from the low point of the day. How big is this in the larger scheme of things for Reliance?
See, I don't think that market will be too.
I think there is a bit of a scratchy line. We'll try to reconnect with him. Mr. Tulsian, if you can hear us clearly, the stock has recovered from the low point of the day. The street likes this. We'll try to reconnect. Meanwhile, we have Prakash Diwan as well. Prakash, what do you view? How do you view this for Reliance? How do you view this development for Reliance?
No, of course, it's extremely positive, and especially given the context of the weakness that we saw in the entire balance sheet has, the drag in the P&L and the balance sheet has all been from the gas side, the exploration side. And this possibly brings back a little bit of hope and promise that this would also, the company will, the business would start firing on this particular cylinder. So now you have Petchem, which is doing extremely well. You have refining. You got Geo contributing, and now gas, which was pulling things down, could also move things up. So very positive, but of course we'll have to wait for the contours because we are talking about a slightly long-dated plan in this case, and we'll have to see how the milestones would be set up. So once more details come through, I think the market will like it.
All right. I think we've reconnected with Mr. Tulsian as well. Mr. Tulsian, 30 to 35 million cubic meters of gas per day between 2020 and 2022. What does this mean for the company's revenues, and how should the street view this development?
I don't think that this news development will be seen in any way positive for the stock, for the simple reason that this is a front-ended statement. 2 to 3 years, even if I take an average 3 years down the line, that too with an investment of 40,000 crore. If you really see the past track record, in fact, BP have been the partner of the company, and in fact, nothing has happened in this last 10 years. And practically, if you really take the call on the Reliance Industries, which I, as a fundamentally analyst take, probably exploration stands on their business verticals, maybe at the number 6, maybe not number 3, 4, 5, number 6, because maybe first would be Petchem, second would be refinery, third would be Geo, fourth would be retail, and fifth would be their other kind of foray. Maybe in the kind of investments, taken in so many entertainment-related stocks or maybe telecom-related stocks. And these explorations have been a big failure or on part of the company, whether at Shell Gas or maybe at the domestic level. And these kind of announcements have been, seen coming in from the company. And I don't think that market will really be too enthused with this, because this is going with an investment of 40,000 crore fresh. People will definitely be keen to know what has happened to the old investments, which runs into 50, 60, 70, 80,000 crore, which has not yielded any kind of result. So I won't be taking this, because as I said, that there are many other positive triggers which can take the stocks to move up of its own. And this exploration of the 30 million standard cubic meter of gas per day by 20, even if I take on an average in FY21, is too far 3 years down the line, which I won't be enthused and, taking any positive cues.
All right, Mr. Tulsian, thank you for putting that into perspective. In fact, the intraday chart of the stock should come up for you as well, and that has fallen off from the high point of the day. And BP had earlier also, initiated or informed the street about this development. We also have Devin Choksi with us. Your view, Devin?
This is part of the R-series deep water gas fields, I think, for which BP Reliance has come together. As we saw in the last year, I think one of the fields is basically commissioned with 12 million cubic meters kind of a production, which is a proven stream, I think, in 2020. I think this is second of the lot as I see it, and I think you would have somewhere around 35 MMSCMD kind of a production happening from this particular initiative. It's around long-run projects. Honestly speaking, I think you don't have to take the view at this point of time. As you go closer to the rate of production, I think that would be more meaningful to take the view on the numbers. And at this point of time, I think we take a note of it that yes, the joint venture is progressing well, and pushing across the investment as desired out of the joint venture in the gas production from the R6 fields, R6 fields there.
All right, gentlemen, thanks very much for joining in with that quick take. Let's also head across to the management of IndusInd Bank, who are detailing their numbers.
Quarter 4 PAT growth came up at 27%, despite the fact that the industry as a whole suffered mark-to-market losses on the bonds portfolio that they held. Fortunately, we didn't have any losses, and therefore we've not had to amortize any of those losses as were allowed regulatorily. But of course, the gains came down. Therefore, trading income was down. But in spite of the fact that trading income was down 56%, we've shown a PAT growth of 27%. The interest margin remained stable. We are at 3.97. We raised our MCLR by 40 basis points during the quarter, which is a reflection of what's happening in the cost of deposits markets. Deposit prices have certainly moved up. Credit growth came up at 28%, and we did see a surge in the growth. And there are three elements to the credit growth. One, of course, is the solid surge we are seeing in the growth of our vehicle finance businesses. Vehicle finance, last quarter itself and the quarter before that also, we could see momentum coming in, and quarter four showed a solid momentum overall. So if you saw that disbursements, quarter-on-quarter disbursements on vehicle finance went up by 12%, and year-on-year they went up 47%. That's the entire portfolio. If you look at just MHCV, which is commercial vehicles, MHCV alone grew year-on-year by 67% and grew quarter-on-quarter by 27%. So you can see the surge in our vehicle finance industry, and overall the book grew by 24% year-on-year. That's one part of it. So that's what we call the vehicle finance retail portfolio. Then there is a non-vehicle retail portfolio, which also grew by 30%. And the growth was very secular when we also saw a surge in the growth of our corporate book, which also grew by almost 30%. So a 28% growth in our credit portfolio. And of course, a robust growth also in the deposits. As you know, the industry grew by about 5-6% on deposits. We grew by 20%, so well above industry growth. Our gross NPAs were stable at 1.17%. And even after considering one-offs, some of the one-offs were caused by divergences, and we'll show you the detailing of the divergences as well. And of course, we have upfront taken the only what do you call it, troublesome account that we had in the diamond industry, which is well talked about. There are two. We don't have one at all. The other one was a legacy account, which we have treated as a fraud. The rest of the industry is still working on it. It is standard with all banks, but we have taken it, classified it as a fraud, and we have provisioned as per RBI norms. So we've done that. That was the only account that we had there. So credit cost for the whole year comes at 62 basis points, which is flat, and the year before that was also 62 basis points. So it doesn't make any impact really on either our gross NPAs or our credit costs for the full year. Other than this, the client base has grown up to 11 million. We grew by 6 lakh customers during the quarter. That's the new run rate. And our target of 20 million customers by March 2020 doesn't seem to be too aspirational. The earnings per share grew up to 63 rupees, 63 and a half rupees. Our cost to income ratio fell by 1%. So cost to income has actually also gone down. Other than that, we have on the digitization side, there's a lot of interest on what happened digitization. We were the first bank to introduce WhatsApp banking. There's been some coverage of that and this thing. I don't know whether we can talk more about it. WhatsApp should be talking more about it, then we should be talking more about it. And I think the thing that we are really happy to see is that our mobile app was rated #1 by UBS, and it was #2 by Forrester. Forrester was last year. So I think these are the thing. Our branch network is going apace, so we are on target to achieve our figure of 2,000 that we had said for planning cycle 4 by March of 2020. So that's a brief sort of headliners on this thing. Yes, The other developments, of course, were that we got 2 approvals for acquisitions during this quarter. One was the Bharat Finance. We got an NOC from RBI. Before that, we had got approval from the Competition Commission, the CCI, this thing. We are now awaiting approval from SEBI, post which there will be the NCLT approval, and therefore we look to be on track to integrate this business in our business by mid of this year, or maybe around July of this year. So that is one approval. The other approval, which is also in the public domain, was on account of a company called ISSL, which is a subsidiary of ILFS, which is a market leader as a professional clearing member of the stock exchanges. It has a 20% market share of the professional clearing membership. A professional clearing member is like the broker of brokers, you know. So that also, I think we need only need now SEBI approval. There's no other approval needed, and that integration should also happen sooner than later. So these are 2 highlights in terms of approvals. I think that's the headline. I think a little bit because you all will delve into it. So let me show you this whole thing about the divergences. This thing, we have a slide on that. It's also uploaded on our site. Okay, so the divergence number was 1,350 crores, and we have given, it's of course in the SEBI format results we've declared, we've shown that. This is an explanation of that, and also to show you what is the net impact. The net impact is the bottom line, that the gross NPA moved by just 186 crores, and it had just maybe a 2 basis points impact on our credit cost for the full year. So I think the only explanation that you need to do is that there's one large figure you see there, 518, which was actually also seen last year. This is that large cement account where there was a bridge loan where we were repaid in June of 2017, but for legacy reasons, this is still being shown as a divergent account because it has no impact whatsoever out of this thing. This was shown last year as well, and it has been repeated in that sense. I think we had made a full provision as of March 2017. We had made a provision for it, and it was repaid by. That's the big one. And of course, then you see others that were already classified as NPA. It was only timing issues, and as a consequence of this, the net impact that you see at the bottom line is 185 crores on gross NPA, not on the provisioning. So gross NPA figure just moved by 185 crores. But other parts of the gross NPA book also caused recovery. Therefore, the overall gross NPA book just moved by 1 basis point, from 1.16% to 1.17%. So there was, I mean, I don't want to overemphasize this, but there was hardly any impact as a consequence of this thing, if you see the breakup of this divergence number. Okay, anything else we want to show?
Yeah, this is the slide.
Oh, yes, very important. The quality of the loan book. So, you know, that's most important. So if you look at the, do I have it here as well? I'll read it from there. So this is how the book stands. The gross NPA is flat. The credit cost is flat in spite of the one-offs that you have taken, right? The restructured book, and that's most interesting, the restructured book is probably the lowest in the industry now. I don't know the latest figures of all the banks. The restructured book is down to just 5 basis points, right? And even if you take the gross NPA and the restructured book, it's actually down over quarter on quarter, down from 1.31 to 1.23. So it's a downward trend in whatever should downtrend. ARC sale is the other figure that everybody wants to know. our ARC sales number is 0.3% of the total book, and actually it has fallen from 0.35 in Q3. The provision coverage ratio still remains strong at 56%, although it moved down by about 2% during the quarter. The exposure to those 40 NCLT accounts, that's one item of investigation always. How much exposure do you have to the... We have a total exposure of 385 crores, and we have provisioned 65% of that already. We don't anticipate any more provision. In fact, maybe there'll be some recoveries there. The AAA and AA rated exposures now constitute 36% of our book, and they used to be 30% about a year and a half ago. The corporate, if you're talking about the corporate book. So the book quality actually is showing.
Okay, that is IndusInd Bank and the management. NII profits in line. The street was disappointed on account of the wide divergence in the gross NPAs between what the bank reported and what the RBI would have reported. The bank reported 1,050 crore. According to the RBI's guidelines, it would have been 2,400 crore. But as the management explained, part of the divergence can be explained by a large cement M&A bridge loan, which has been repaid. Other loans of nearly 257 crore would have been repaid. So the net impact on account of the RBI's rules would have only been, Lata, 186 crore. So what should we look at? Should we look at the headline 1350 crore or 186 crore of divergence, which Mr. Sopti was talking about?
No, clearly that 518 crore is a legacy issue that was to the Ultratech JP deal, and now a JP loan becomes an Ultratech loan, so it is standard. No two ways about that one. RBI only wanted that loan to be consummated and until then to be called an NPA. Now we know that that plant belongs to Ultratech. So clearly it's not 1350 crores, it is probably 850 crore or 800 crore thereabouts. And even from that, Mr. Sopti claims that 257 crore has been repaid, and they have classified as NPA prior to divergence itself the other 236 crore. So in my book, other than that 518 crore and this 257, together about 750, the remaining should be classified as NPA. So it's 750 crore more, but for a big balance sheet like IndusInd Bank, this doesn't add up to much. It doesn't look like a wanton disobedience or trying to circumvent RBI rules. So I think the market will not be terribly upset. It's not as small as 185 crore. As the balance sheet argues, or as the P&L argues, but it's not as bad as 1350 crore either, is my sense, and I think that's why the market is given a kind of a middle path and stood at 2%. Very quickly, two other issues. One, if IndusInd has such a divergence, such a big divergence, we should be wary about what we hear from other banks, which are largely corporate lenders. It shows that the Reserve Bank is determined to clean up even any iota of doubt in the classification. So we could find a very severe RBI in the months to come as well. And anticipating that, banks will be way more stringent in the way they identify and classify accounts in the coming quarter. So overall, it's more red for other stocks, other corporate lenders, than for IndusInd itself, for whom the overhang is now over. We have to worry about the other banks, especially when the next year's RBI inspection starts. That's the second observation. A third one is what our colleague Sapna reported, that the government is prevailing upon RBI, or is pleading with RBI, that the one-day default rule should stay, but should kick in after 1 year. Now, going by the Deputy Governor's speech yesterday, I don't think the RBI is in a mood to relent, but it's just keeping the hopes alive. I just wanted to put that on the table.